as always, are pretty much spot on. I'm looking at that dollar index and I'm a little bit not bemused, not perplexed, but encouraged, I've got to say, by what I'm seeing on the chart. And I'm a massive dollar bear over time, but that's over time. It's not necessarily right now. I've got all these little lines on here, to be fair. Let's get rid of them. But what I do see at the moment is, pardon me, the fulfilling of a market structure, which is quite clear to me, which is this box range in here, which has been broken once to the downside, once to the upside, and is very, 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 very well established between about 106 and 99 or thereabouts. At the moment, we're on the backside of a trend line, or a trade line, as I call them. It's not actually a trend line. And what we're seeing off that particular trend line or trade line is a break and retest. Isn't that what Lloyd was just calling for? Something like that. That's exactly what I see. And I also see the bottom of that range looming very, very near. And that's the one thing that does concern me. I'm short-term bear until we get to there. Then I think the dollar comes back into favor for a little bit. And we'll probably go back and fill this space one more time, I believe anyway. Into 2024, when all of this toing and froing with an election year is going to be very, very interesting. The Fed, of course, has played their part, and they said that they're going to consider, I think was the word. I'm just choosing my words carefully here, but it's on the agenda that they're going to cut interest rates into 2024. Maybe not in the first quarter, but thereafter. So I think short term, I've got to be looking for a dollar rally off the bottom of this range once we get back to the 100 mark. I think I'm looking for a short-term rally, maybe back to fill in that space. But I can't be long the dollar right now, given what the Fed has said. And I think if you're selling rallies off the dollar right now, you're probably in the right space. So the retest of that trade line, as I call them, is probably quite pertinent. And if you're not in dollar shorts already, then I think you've got a little bit of room to maneuver that in the next couple of weeks. Maybe not even that long, but that's exactly where I lie. That brings me to, and I'm only going to share these three charts. The other one is, or the second one is oil. And this is, once again, very, very interesting. And when you're talking dollar, you're talking all things that trade against the dollar. This one, of course, is one of them. And I'm going to go to gold in a minute and talk about what Adam has said about gold as well. I see oil very, very close to a very strong support level around about the $68 mark. It's been strong resistance here. It's been support here. It's been support here once again, support here again. I can't see why that wouldn't be the case on this umpteenth occasion that we've hit that level. I've already got a reversal bar there on the weekly chart. I don't know that I'm going to trust that per se, but maybe I will. It depends on what happens in open on Monday morning. The daily chart is telling me that we have not a reversal right now. I don't have a bullish engulfing bar. I don't have a double bottom in this vicinity. I've certainly got double bottom sitting over here. So I think there's probably one more push to the downside for oil, and maybe it takes out this level. But as soon as it comes back into here, I'll be looking for a higher low to trade oil long against the dollar. But that's not right now. As I said, the reversal bar on the weekly chart is interesting, but I don't think it's compelling enough for me to trade it. I want to see one more push to the downside, then, as I say, that higher low, and maybe fill in that space at the very least, and maybe head back towards these highs. We will see. That's oil. Now, I'm going to talk about gold. Now, I've been a gold bear for, well, I don't know how long, but it seems to be the longest time. And it's on the back of this double top that I saw, and Adam spoke about this level, and it's very, very interesting because, and it's also that 2000 round figure number that everybody's talking about. And we've heard talks of, gold experts taking us to 10,000. We've heard gold pessimists taking it to 1,000. And there are many, many thoughts in between. I think the common theme around gold is that once it actually takes traction above 2,000, it will probably go and go and go for a period of time. Yet here we are again, trying to get through that level. What happens next? Well, crystal ball time right now, to be honest. But if I'm talking about gold versus the dollar, and my thesis on the dollar is short-term bearish, short-term bullish, long-term bearish, then I'm probably thinking there's one more downside in gold as well. I'm not sure where that takes us, to be fair. If it takes us back to maybe that level, which is not so far away, it's only 1976, then we can probably look for buys at that point. We can probably look for buys around about 1800 if it gets down that far. I had this longer term thesis that there were three interesting plays with gold. One being, when it came off the top the first time, it went that far. When it came off the top the second time, it went pretty much exactly the same amount. When it came off the top the third time, went absolutely nowhere near that. So that, to my mind, is probably a bit bullish. I'm not convinced that's the case, but I do see in the short term the need for gold to hit some support level, and I'm not sure exactly where that is. That's the first one, in my humble opinion, around about the 1975 mark. There's probably one up here as well, about there somewhere, about 1900. So if it gets down to there, I'm probably a buyer. I'm a small buyer here. I'm a little bit more keen there. But if it goes down to here, I'm a loser. I'll be looking for shorts if that's the case, off the top, off both of these levels. So I think it's really, really interesting. And going into 2024, the dollar is going to be the thing that I look at most of all, because it really centers around that. Most of it does. And as I say, longer term, I'm an absolute bear the dollar. But short term, I think it's probably got a little bit of life left. That's my 2 cents worth anyway, guys, going into 2024 and the Christmas break. Don't forget, of course, there is a very, very strong, having said what I've just said about gold, there's a very, very strong seasonal bias in gold this particular week, 2 weeks, 3 weeks coming up as well. So very, very interesting, that particular.
Can I add something to that?
Of course, mate.
Yeah, it was fantastic, and that's a really, really good point, because the thing is that, until it gets through that level, we can't assume it's going to get through the level. We have to wait for it to kind of do that, because it could ultimately fail. If it becomes exhausted, it could head in a different direction. And so the point you're making, which is great, is that when price anyway on any instrument is battling with a level, it kind of pays to stand back a bit and wait for it to decide which way it's ultimately going to go. So there's kind of clues here, but again, there just might not be buyers above that level until such time. And then the only other thing I wanted to add was that I have a WhatsApp group with guy friends, and obviously from school, and there's a little group of us in London, and one of the things that they often keep referring to is sort of armchair investors. And one of the things they often want to say is that gold is this hedge against inflation, which a couple of the guys, that is their primary reason for engaging in gold. And so we had a bit of a fallout, because I kept saying to them, look, gold serves a whole lot of other purposes than simply as a hedge against inflation. And then I said to them also, I said, sometimes you get these coined terms such as gold as a hedge against inflation that doesn't necessarily, and it influences your trading decisions. So people, for example, would have been buying gold during last year and parts of this year, when this year it's been climbing, but actually inflation's been coming down, and last year inflation was off the hook and it was dropping, and a lot of that was driven by the dollar. But because people have this idea in there that gold is a hedge against inflation, it sort of drives their decisions. So I'm only mentioning this because it's very important that when what we're seeing on the chart is not matching up with what we believe it should be doing, that we should go with the chart. We should always, because then it just means we're not finding a proper explanation. And in 2022, the dollar was the single biggest driver of the markets. And that knocked gold off its feet because the dollar was so strong. And the hedge against inflation component had really very little to do with it. So you need to see a correlation between your idea, what you think the market should be doing, and the market should be doing it. If the market's not doing it, then you need to go with what the charts are telling you. Sorry, that was the only thing I wanted to add while we're talking about gold. It's such a great topic.
It's such a great topic, and it's such an interesting point in history, frankly. And I think the thesis of what you're just saying is believe what you see, not what you hear, right?
Yeah. Yeah.
And I believe I'm seeing the end of the show. Hang on 2 secs. I've got a question here. Leon, looking to close positions so the tax year is cleaner. This is from Leon. So that's something to just add. Some professionals are either on holiday. This is what Adam was talking about before. Funds will slow. Proprietary traders I talked to also just shutting to take a break after a good year. So a bit of a quiet background. And then there's the question, what are hedge funds going to do in thin markets / sectors, question mark. Could they ramp up to boost their performance fees, question mark. Some have made really big gains, and any gains will be additional performance bonuses. Just to add my 2 cents, a lot of bank desks are thinning out. There you go. That's echoing Adam's words pretty much. So is there a golden rule to all of that? I think as novice traders, we need to take heed of what we've just heard. As a little bit more experienced traders, then have a look and see what happens over the next few weeks. Keep your money very, very tight to your chest and put the risks very, very small. That would be my counsel. Yeah. If you've got something that looks absolutely fantastic, by all means trade it, but don't put the house on. That would pretty much, again, be my counsel. Listen, everyone, this is it for 2023 as far as the Sunday market update is concerned. My thanks in particular to Sam, who keeps me honest every single time I come up and get before a microphone. Thank you, Sam, for a great 2023. It's really, really been a great pleasure to be working with you. And to our presenters tonight, Lenka and Adam, thank you for sharing your thoughts on a Sunday evening for most of us. And have a wonderful, wonderful Christmas, everyone. Thanks for being our friends and our family in the A2W family for 2023. We'll be doing it all again in 2024. Have a merry, merry Christmas. Bye-bye.